Okay, hello Tech traders, and welcome to this weekly trading roadmap for the week starting the 26th of October 2015. What we're going to be covering today is some of the event-driven risks um, and taking a look at the risk and money management plan ahead, taking a look at the Bunds and the Eurostock futures, taking a look at the structure, particularly their weekly market profile structure, and then from there we're going to try and build a few scenarios to see if there's any particularly good trading opportunities. We had quite a bit of movement last week. Just a reminder, last week we had the ECB was particularly dovish and basically hinted towards a December move or some sort of December move. And then we also had the Chinese rate cut. So these are the two big moves that we had last week. So particularly some decent risk-on moves. So we'll take a look at how that's affected the markets, and we'll take a look now at a few of the event-driven risks in the week ahead. So starting with Monday, not really much going on. Nothing that's going to be particularly too volatile or something that we're looking at really. U.S. new home sales, German IFO hasn't really been that volatile recently, so don't pay too much of your time on that. We've got the ECB's MERS also speaking. I've got a pretty low relevance on the lot of Monday, so I'm giving myself very little risk allocation, about 10%. Moving on to Tuesday, we've got the UK GDP. Going to be somewhat significant. We have seen a very big UK retail sales. So that was particularly large last week. So that is going to be quite important. Just keep an eye on how the GDP figure is. Maybe we already have some sort of pricing in of a much better number with the U.S. durable goods, services PMI in the U.S. as well, and consumer confidence. So that is going to be also a pretty decent figure. As we mentioned every single time, we know that the U.S. is a consumer-driven economy, so this is going to be quite important. Also have the ECB's core coming out to speak, so do keep an eye on these speakers here from the ECB, because they have hinted towards some sort of move in December. So any sort of backtracking on that, anything that kind of maybe gives us an indication that maybe the market's gotten a little bit ahead of itself, we might see a bit of steam come out of the market. So do bear in mind, we've had a very aggressive positioning, especially in the equity markets and the euro. The euro did about 300 pips on that day, literally just off of that dovish statement. So do keep in mind that currently the market's very well positioned for this. So anything that backtracks, we might get a bit of steam out of the market. So do bear that in mind. I put a medium relevance on Tuesday's event-driven risk. I've given myself 15% risk allocation, but really what I'm looking at this week is Wednesday, and everyone should be preparing very well for this Wednesday, because we've got the Riksbank rates, which is something possibly some traders are looking at. I don't particularly look at it, but do bear it in mind. But FOMC rates is really where everyone's going to be paying attention to. Now, for the October meeting, there is no press conference. So there is no press conference in October. However, we have heard that all meetings are pretty much live. Having said that, if they're going to make a move and if they are going to hike rates this meeting, which is very unlikely, and in fact, I think we have something of the order of about 6% priced in for a rate hike this meeting, and about 39% priced in for December. This is our pricings according to the Fed Fund futures. Now, according to these, we've got this is the probability spectrum that we have at the minute. Now, if for whatever reason we get an announcement that there is a press conference, so if we get that announcement that we have a press conference, you shouldn't really be waiting for what's going to come out of that press conference, regardless if it is a rate hike or not, or if they want to indicate something, whatever it may be. They're putting out a press conference because they need to say something important to the market, and I'm presuming that the move is going to take place on this. They're not going to wait for what comes out. If someone comes out and says there's a press conference, and we get some sort of leak from the press that there's a press conference, I would say whatever your trade plan is for a potential rate hike, just hit all those markets very aggressively. If your plan is to sell the S&P, then make sure you sell it on this announcement. If your plan is to hit the T-notes in the 5-year, the 2-year part of the curve, make sure you're aggressive on this, because this could be potentially huge and something where as a prop trader, discretionary prop trader, I've got way more edge than algorithms. So I'm going to be paying attention to something along those lines. Obviously, it is an outlier, very big outlier, quite possibly very unlikely, but I will be prepared for that kind of scenario. Obviously, in a normal case scenario, if we come to the rate decision and really the only rhetoric we get is that there's nothing really, they're not really looking to price anything in or do any sort of move this year, for whatever reason, we're going to have to see this probability move lower. On the contrary, if they're indicating strongly that they're looking very closely at a December hike for whatever reason, then this probability is going to have to move up. And thus, if that moves up, your bond curves are going to move down. So bonds are going to move down on that scenario. And, well, your dollar is also going to be moving up quite aggressively. So do bear these scenarios in mind. They're going to be quite important. You should be building your trade plans accordingly for this. On that day, I've given myself, I think, comparison to the other days, the most risk allocation. So 30% of my risk is going to be put on that day, specifically because of that event. Moving on to Thursday, we've got the German unemployment and CPIs. These are preliminary numbers. They're going to be coming in region by region, so do bear in mind, it'll come out, we'll get one figure for Bavaria, one for Westphalia, and it just keeps, they keep coming out successively until about 1 o'clock when we get the full figure. So do bear that in mind. We also have the European Economic Confidence, US GDP, which is also pretty important. I should have put that in bold. The pending home sales and the Fed's Lockhart. Overall, but myself about 20% risk allocation. On Friday, we get the European CPI. Obviously, a lot of the figures that we get from the German CPI are going to feed into this figure. The European unemployment, the US personal income, PCE core, which is a very important figure for the Fed, hasn't really moved much recently. The Chicago PMIs, the University of Michigan Consumer Confidence, and the Fed's Williams and George. Ultimately, this week we're also looking at the month ends. So in the bonds, we'd be looking at the extensions, and in the equities, the month end flows. We're going to be looking at the flows at the end. So it all is order flow based, but the month end extensions particularly we're looking for buys, and the equities we're looking for sells. Now I'm not going to go through that in very much depth, but if you wanted to learn a little bit more about that, you can visit our website at futexlive.com. If you sign up for free there's probably quite a few videos on that already. Right, so let's move over to some of the markets that we're looking at for the week. And first of all, we're going to go through the bunds. So interestingly, this is the structure that we had from last week. First, I'll go through what happened to the downside. We did go through this, quite in depth the week before. We had our scenarios built in. We said this was our first inside week. This was our first inside week low. This was another inside week low. So this is 1 and 2. We did take that out. But having said that, you have to notice that the market had a very large move before it got into there. So imagine if you have someone, a stick figure now, and he's thrown a punch. Right, he's thrown a punch. So at this stage, he's thrown a punch through all this, and at this stage here, his arm is already extended. So if he has to punch anymore, his arm's already extended. He can't actually extend it anymore. Now, if let's say this structure was here, and then we made this move through here, I would have said that we probably would have had a much more decent reaction through that inside week. So do bear in mind, this is where context of the market makes all the difference as an intraday trader. If you're trading this structure and you see the market's moved particularly quite a bit into this area, you've got to imagine this stick figure, this guy that's just extended his arm. He doesn't have any more oomph in his punch, so that there wasn't really anything through this. We just extended by very little. And the next day, we bid back up into this region, and there was a lot of traders, trying to sell these regions in here. Everyone was looking for shorts, but the price action did not indicate that there was any sort of sell in here. It just kept levitating higher and higher and higher. We just basically came back into this larger value area zone that we were in for pretty much the majority of the last 2-3 weeks. So that was pretty much the context of last week, and then pretty much the beginning of last week. And then if you look at the latter end of the week, this is where we had the ECB. So we had the ECB on this day. This was the announcement from the ECB. They were looking at potentially even more negative rates as well. That kind of bid the market up even more. We came and tested this pretty key area in here, as you can see, that last swing high, which was at 157.67s. Just poked through that. Then on the Friday, we left a bit of a selling tail, and then came back inside to basically post the VPOC of the week, as you can see here, at 157.45. So that is our VPOC of the week, 157.45. So if we take a look at the scenarios now, we've got our value area high at 157.71. That is our value area high. So that is going to be our very key area. Obviously, we've got the selling tail in here. We want to see how the market reacts around this region. Is there more sellers in this region that's going to drive us lower? Or can we take this out, build a bit of value here before moving higher? Now, if we're holding below here, the next real area we're going to be looking at is, like I said, the VPOC of last week, which is at 157.45. That's also coincidental with that close of last week, which is just below there. If we just point that out for you guys, it's around the 157.42 mark. So that is our close of last week. Now, ultimately, if we just take a look at the structure that we've built here, we've got the VPOC in here. So this is a very highly accepted price. The next real accepted region is down in here. This whole area in here has very little traded. So I wouldn't be surprised if the market can get below 157.45. So if we pierce here and then start using this area as resistance, there's, in my view, at least, a good argument that we can come in and start auctioning our way lower to fill some of this area in. Now, do bear in mind, the very, very important level is this inside week high at 157.23. So that area could actually give us a bit of a floor if we get down here. It already did offer us a bit of support on Friday, so do bear that little level in mind. But if we do get through there, so the first scenario is, we're holding below the VPOC. If we pierce below there and hold below this, there's even more of an argument for this market to come and test this next high volume node. Now this area is pretty interesting to me. 157.75. Just below there at 74s and 73s, these levels in here, 74s and 73s, that is our high volume node or nodes. And our 50% of the week is at 156.75. So the 50% and a high volume node comes in a very interesting level. Now, you don't necessarily have to make that, doesn't have to necessarily be the low of the week, but for me, I think there's pretty good risk reward in this region, only because, like I said, we've got a confluence of levels. We've got these highs in here, the high volume node, and the 50%. So this whole region in here, I think, is very decent support for the market. Regardless if the value area lows of last week are 156.37, I think if we're getting all the way down here, it doesn't, it's not particularly good for the market as a bull. If you're a bull in this scenario, you don't really want to see it get all the way down here. If we start building structure, this is getting a little bit messy now. Let's just point this little area out again. If we get back into here, we're effectively filled in all of this, and that it's not particularly as bullish as it was before. So do bear that in mind. So that is really that's your line in the sand in this region here. You don't really want it to get past here. If you get past here, then we're actually looking pretty bearish, and we could actually start looking for a move back down to those areas that we mentioned before. But this is particularly the structure we have now, and these are the scenarios that I'm potentially looking at. In the beginning, if we can hold above here, that gives us some impetus to test and attack this area in here, potentially to build some a base there. If we can break above there, then I could see this continuing. If not, this is our value area from here to here, but ultimately this is very lightly traded and could potentially might want to be traded this week if we get back below there. Just bear that in mind. That's currently the structure that we have in the bunds. Right, let's untoggle that and move over to the Euro stocks to close this up. And taking a look at the Euro stocks weeklies now. So from what we saw last week, we did mention, putting this into context again, we did mention we didn't want to see the market fill in this area here, which as you can see it did not. It held support just above that area, left that buying tail that we were talking about 2 weeks ago, and the market actually even held this pretty key VPOC in here, which is the low of last week. So obviously the ECB came in. We had a particularly dovish ECB that drove us a lot higher in price. If we put this into context, we've got the highs of the week here at 34.48, the close of last week at 34.33. The value area highs of last week now come in at 33.71. Now, it is a decent, that is our value area high of last week. However, I usually look, this is our volume value area. Now, our plain value area high, the TPO value area high, actually comes in at 33.54. I particularly like this value area high a little bit more. We've got a few less TPOs in this little region here, so little time spent, and also that is really the next area of a bit of a high volume node. So this is a little bit of a high volume area, very little. I'm not going to say it's big. This region particularly interests me, from around the 33.39s up to the 33.54s. Now if we go back on the profile, you will notice that area actually has a previous weekly VPOC. Here was around 42s, 41s, and a high volume node in here. So that is our 33.39s. Those are 33.54s. So you can see this region could be particularly important this week if we get down here. So this whole area is looking particularly juicy for me. If we get down to this area, I'm looking potentially for a reaction or some sort of buying opportunity in this region. So that is really where I'm looking at. I don't really, I might look for a few scalps or a few trades in this region above. Obviously, we've had a very enormous week to the upside. We might need to get a little bit of steam out of the market, but ultimately, if we dip down into this area, I would like it obviously to hold the value area high of last week and then move. But in these really extremely elongated profiles, just bear with me a second. Obviously, we've got a very, very elongated profile, very lightly traded. So you can see all these regions here, lightly traded. This whole region in here, lightly traded. But you really don't want to see this trade. As a bull, you do not want to see this trade. And that kind of fits in with the scenario. If we do find a bit of a buying reaction in here, that could give us the impetus to kind of test right back up in here. Obviously, we might not even come and test this here. Maybe the market's so bullish that it just continues its trend to the upside, given the dovish ECB. But that is particularly a scenario I'm looking at to the downside if we get there. Obviously, if we do break this area, then I think if we break this area, I'm particularly looking at potentially, for this market to come and trickle down and test this previous really important area. If we just point this out for you guys, obviously we do have, if I just remove that and add that in here, we do have these highs here at 33.15s. However, ultimately what I'm looking at is this region in here. These previous highs, as you can see, all nestled in this area. That's where I'm looking at. If we get through that 50% area, this is the area that's really, really important. The bulls absolutely have to hold this if it's going to be holding to the upside. If we break through that could be an indication the market's really not as bullish as we think, and we could start seeing some really extreme moves back down to the downside. So ultimately, that region, 84s, VPOC of the week, actually a lot lower at 32.67, which means that you could see that the structure in the market comes in a lot lower. So there is that potential for it to dip down lower, but ultimately you wanted to see it hold between this area here. Obviously, if we get down, we do have the 34s, as I believe was in before, as the value area lows of the week. And obviously, if we get below that, that is, like I said before, going to be particularly bearish. So that is a very bearish scenario. To the upside, if we just point out just a little bit to the upside, if we go back, you can see this whole splatter of areas in here. 35.06, quite notably, as you can see, is the value area high of that week. So we are in this auction region. The next real area we're looking for is potentially that VPOC at 34.87, and the value area highs at 35.06. So that's a pretty important area. Was a previous weekly VPOC. Also, you can see if you move back in the days, there has been some decent support and resistance. So we've seen some selling tails around here. We've seen some highs of the week. We've seen some buying tails in this region here. So this whole region is actually quite important, for the bears, at least in the medium term. So just keep an eye on that area if we do get up there. But ultimately, being as we've come back into this value area, we should really be looking for potential longs for that to trade out up to this area that we just mentioned in here. Alright, well, that's basically what I wanted to go through this week. I hope you guys have a great trading week. I'll be doing the price ladder video tomorrow, and also on Wednesday I'll be doing an FX and commodity stream, and finishing up the week with the weekly market wrap on Friday. So good luck for the rest of the week. Happy trading, and we'll speak soon. Bye-bye.